Mike, how many everyday investors do you talk to each day?
On a good day, probably 12 to 15. On a normal day, 5 to 7. But overall, the company, we probably talk to 20 to 25 a day.
Gotcha. That's a lot. And then what are the main hurdles and struggles that people are experiencing right now? Also, like what are just the topics that are coming up? I guess 2 questions there.
Yeah, it's good because you start seeing patterns out there and you're trying to help people, and that's what, this channel and everything else is about. So what are the hurdles? Number one is probably, how do I get 100% financing? Everyone wants to get into this or get into real estate, and they want to figure out, how do I get a property with putting little to no money into it? Typically flips or rentals or whatever it may be. What is it that I could do, or where can I come up with that money to get the 100% financing? Number one, in value add, there are still lenders out there. We do some too, where it's 100% financing after you've done 1 or 2 deals. What happens if you haven't done 1 or 2 deals? You got to look at things like HELOCs, like taking money on a HELOC on your primary residence or a rental property. If you don't have that, then you have to look at the real world out there of finding family, friends, or as I call it, real people's money who want a better return on their funds. There are a ton of people out there who are looking for better returns who have 20, 50, 100 grand. So if you're looking for 100%, a lender can only give you 80 or 90%. You need to open up and you need to become a real estate investor. I think that's what we talk to people about, is like, if you're in this, become a real estate investor, which means have the confidence to go out and ask people. Find the good deals where you can get that extra money. It's also starting out with using some creative financing with credit cards. Get the 0% business cards to fund the rehab, to fund the staging, to fund the VRBO, what you're doing. You have to look at all your options out there. So to get 100% financing, we look at, like, how do you stack? I mean, in the finance world, it's called stacking. You get your primary mortgage company, if it's flips or traditional lending or whatever, that maybe give you 80 or 90%. How do you stack other financing on there to get you 100%? Some people call it gap funding, all kinds of things, but we've talked about HELOCs. We've talked about family, friends, real people's money. And there's also the other thing about finding a partner. There's a lot of people out there who have some money and they just want a little bit better return. Everything's getting more expensive, and they would rather have a 10% return than a 7 or 6 from a bank.
Yeah.
There's options out there, but as a real estate investor, this is your business. You have to take it serious and go out and find those options. You have to open up and talk to other people. If you don't have the confidence, you have to gain the confidence to get out and find those kind of funds.
Okay, so I'm hearing that the number one concern that your clients have is, how do I get 100% financing? And basically the way to do that is to get creative with the financing, get creative with the stacking.
Yep.
Gotcha. So
especially for the first couple.
Okay. So what's the next biggest concern you think that people bring up?
Well, concern or how to make this easier. What's happening out there is, with the inflation and everything else, money's getting tighter, which means it's harder to get. There's less and less money available because of what the Fed's doing. So if you're coming and looking for funding for a property, be prepared, because like investors, I guess we just talked about how many people we talk to daily. And we're looking for the deals that we can lend people money, get our money back, lend it, get it back. We're looking for people who have and are prepared on their investments. So that means making sure when you talk to a lender, you have all your numbers in line. Valuation is probably the biggest thing we see. We just had a person who reached out. He's buying a single family house, but he's going to make it into, and we're going to talk about this soon too, pad splits, but he's going to make it into a 2 unit. So he's going to take 1 unit and make it into 2 units. That property, if it's a single family, will sell for $200,000. His belief was, since he's going to split it into 2, now it's going to be worth $400,000. And that's just not how the market works. You have to understand the market and how it works. You can't just take a house, make it into 2 units and double the price.
Right.
You can't also rely on wholesalers, people who are trying to sell you the property, to do your valuation for you, because they're going to probably stretch it. And at the end of the day, as an investor, you're trying to create income and wealth. And if you rely on other people to give you numbers that are partly inflated, you're not going to create the income and wealth. You're just going to create frustration. So when you're coming to lenders, make sure you know your values, know how that works, how appraisers value stuff, and make sure you have all your numbers in line, purchase, rehab, rent, all these things, like you are the person in charge and know what you're doing, because that's what lenders want. They want to know you know what you're doing. So when they lend you that money, it's not going to be them walking you through it daily just to make sure they get their money back.
So that was how to make it easier.
Yep.
What do you think is your third top thing you end up talking about with your customers?
Is like, what's happening? Where is the future of real estate investing? How can you make money on buying rentals? Everyone's like, can't make money on rentals anymore because properties are now $600,000, $700,000, $800,000. That's true on a traditional property. Downtown Denver, you could probably buy something for $1 million, and you could maybe rent it for $3,500. Those numbers aren't going to add up for you making any money. But if you could take a same property and now what they call pad split, which is divided into single units, maybe it's a 3-bedroom, make it into a 6 or 8 bedroom. It's becoming more and more popular because you could rent that property maybe for $3,500.
Crazy. Each of those bedrooms have like a bathroom?
Each have a bathroom. They share it. All they share is a kitchen. Everything else, the living room, the dining room, everything is converted into a living space. And now, let's say you have 6 units in there and you're able to get maybe $1,000 per unit because you're in downtown, studio is probably 15 to 2,000. You get $1,000. So instead of 3,500, now you're getting $6,000.
Wow. Yeah.
So what we're seeing is more and more people push to pad splits or taking an older house and divided it into 2 to 4 units and renting those out. And cities love it because they're looking for affordable housing.
Yeah.
They're not making it easy to build. So the only way to make it affordable is smaller units. And more young people, old people, anybody who doesn't have a family is looking for affordability and something flexible. They could just go there, live, and go to their stuff. Or short term, their nurses come in there for a little bit of time. Or even
a few months at a time kind of thing.
Older people just coming, to Denver for 3 months, then they live in Florida for 3 months, and they live in Washington for 3 months. They're splitting their time. There's more and more people who are mobile now than there have been in the past.
Gotcha. So yeah, that's like what is new and fresh in real estate right now.
Exactly.
And pad split is that. For all of these, they can go to thecashflowcompany.com, right? Or as always, they can email you, Mike at thecashflowcompany.com. They have questions about these if they want to chat about any opportunities that are coming up as they think about these big topics.
Anything that you have as a question as a real estate investor, like, hey, let's look at this deal. What do you think about this? As long as you have the numbers, just email us the numbers and we could go through it. We could check the value. We could check the rents. We could help you out and just get a second set of eyes on it. And then also subscribe to this channel because this is what we go over. How do successful real estate investors find proper funding? Funding is at least a half of real estate investing because you're using other people's money. So you should know exactly how to do it cheaper, easier, and faster. That's what this channel is about.
Awesome. So those were the top 3. What more do we have? What more topics come up when people give you a call?
One that comes up all the time, but people kind of frown when we talk about it, is how credit scores hinder their ability to get what they want. I would say over half of our calls, there is a score that is just too low for them to get what they want. We've had a couple of people, like a guy from Texas who's trying to refinance this really nice property, has a great tenant. It's a commercial tenant. Everything is good, but his credit score, because he rang up $100,000 in credit card debt, doing some other stuff, his credit score is too low to get him the rate for the property to cash flow. So working on this credit score, setting things up right, getting business credit cards is the number one thing. Getting off your personal credit cards, getting in the business, setting this up correctly so all of the funding options open up. I say the biggest struggle and why people get out of investing instead of stay in it is typically because they're not making money, the funding isn't there, and the big thing behind that is credit scores. So there are ways to make your credit score increase quickly. Even though it's a topic that most people don't want to talk about, it's probably the number one reason that people don't make money in this business.
Yeah, I hear you. And you have a product for that specifically, right? To help people raise their credit scores quickly if they qualify.
We have come up with a lot of different things like the usage loan, which has helped pay down your credit cards on a private loan to get your credit score up so you can refinance, buy that property to get the good rates and the good terms on your deals. We also have helping you set up business credit cards instead of personal because that's the root of all of this. Typically, people get into business, they just have their credit cards, they're doing a flip, they're doing something else, they start using them, usage goes up, credit score goes down, options dwindle.
Right, and I didn't know this until we started working together. The business cards, they don't have that. Like that's not
the majority of them
they don't report on usage.
Yeah, like Capital One is one of those that do, but most of them Chase, American Express, BOK, US Bank. There's a lot of them out there that don't report on your personal credit. So if you're using them in business, great. You don't have to pay them down, don't have to pay them off. They're not hurting you at DTI or your credit score. So even though it's a topic that people don't want to talk about, they should, just to make this easier. If they're in real estate to make money and to create generational wealth, funding is a big part of that.
And to be clear, from other videos, you've told me that people were able to turn their credit scores around within a few months with something like the usage loan that you guys offer.
Yeah, 2 weeks, typically 2 weeks. And credit card companies are getting to where they actually report more often, and you can forecast all those other things. So it's a great tool, a quick tool to get you into something that's better for you. Because if you have to pay on a property every month, a couple $100 or a couple $1,000 because your score wasn't good enough to get you the loan you needed,
right?
Real estate investing gets a little bit hard and you just get out of it.
Yeah, and it's like I didn't even know this was something that people did. So if you have a usage issue, if your credit score is too low for a loan, call this man.
Yeah, we can help. We can help.
Yeah.
And I think the last thing that we see, especially working with new people, is the consistency of just doing small steps. Because people, they make this into such a big deal that their brain shuts off and they just stop doing stuff. Like, hey, I know I just need to call and look at one property per day. But they get to some class and they say, okay, the next 30 days you need to buy your first property. And that's sometimes not realistic for some people because you have to take the steps that stretch you a little bit but don't shut you down. So many people try to take too big of steps, shuts them down. They don't do anything for a week, a month, and then they finally say, I just can't do it. Consistency in this business, this is the tortoise kind of thing. Yes, there's the 5% who could go out and run and get 20 properties, in the first 3 months. That's not how this typically works. It's usually someone will get 2 the first year, 3 the next year, 5, and start growing. And that's a great way to create generational wealth. But it's all about, instead of taking steps that frustrate you, put you in a place that you're not going to keep going, just take little steps, like look at one property per day, talk to one contractor per day, and be consistent on it and keep pushing yourself till you can take the bigger steps and buy that first property.
Yeah.
And take the first property. And don't try to buy 5 properties at once. It's better to have 2 profitable properties your first year than 5 properties you're going to lose money on. And we see
100%.
too many people try to take too big of hurdles and then they just shut down. We see it all the time. People declaring bankruptcy, everything because they took classes, they bought their first property, and then they just gave up because it just become too daunting for them. Real estate investing is the majority of people are the people who just do it nice, slow, get their feel for the properties, get their feel for the contractors, the renters, property managers, build a good team, including funders, wholesalers, and look at this as a 3-year project instead of, like a 3-week project.
Man, I find that really empowering, based on what you're saying, like a reimagined tortoise and the hare story, because would be something like this, because usually the reason that I think people don't relate to it is because the hare could totally have won, but is just arrogant and stops and is like, I could take a nap. But really, like, let's say the hare got swayed by hustle culture and is like going for it and doesn't stop to take a nap, but literally gets exhausted just before the finish line and feels like they have to take a nap and they shut down. That's really what it is. It's like trying to do too much too fast and
your
thinking
brain,
you're one of those 5%ers.
Yeah. And I think the brain just shuts down like, this is too much. This is too much.
Yeah.
Instead of just
I'm not in this life to suffer this much.
Instead of just giving it enough to do that keeps building you. Like, let's just say it's 100 steps to get to that first property.
Yeah.
Some people just need to take 1 step per day and get there. Some people take 2 steps per day, but the majority of people you got to keep taking the steps that don't freak yourself out where you just shut down.
Yeah.
Take 10 steps, look at 20 properties. You'll feel a lot more confident on what you're doing. And then take the next step and take the next step. Look at this as the tortoise that's going to win and not the hare that's going to run out of energy, burn themselves out, frustrate, go broke, all those things.
Great advice, yeah.
I see a lot of people take all these classes and 70-80% burn out even before they do the first one because they put too much pressure on themselves.
Yeah, and hearing
$1 million in 3 weeks.
Right. And then hearing everything you're saying, I'm thinking like, it's possible that especially the really popular classes they're put on by the people that happen to have that constitution. They're in that 5%. and they're like selling basically what they did.
Yep.
And they're like, go out and do this and do this and do this, but they don't realize that they're an outlier. Like they have this really like, or they're just all in on this and they don't really have anything else in their life that they're prioritizing. And for the average person who's trying to balance family and a little bit of leisure and everything, like it makes sense to do it the tortoise way, because otherwise you're gonna crap out, I guess.
Yeah. Once your brain gets to the point where it just can't handle anymore, it's just gonna shut down. So you just paid $30,000 for a class. You just trying to buy your first property, just whatever.
Yeah.
All these things keep adding up. And really what it is take it, find the best property. Keep chiseling away and you'll get there, and look for that 2 first year, 3 and 5. And then you could take off from there. But during that time, it's going to be a lot better than the 70 to 80% who just fizzle out. And then there's other people just get frustrated. Don't put yourself in the same boat as these people who are up there on the stage doing their stuff. There's just so many people who make good money by just plugging away and learning every day. I mean, the big thing is just taking a step every day.
Yeah.
You know, don't try to take a step every month or every year, because you're not going to get anywhere. You got to keep taking steps, but make them small enough that you can keep building and it doesn't overwhelm you with all of the other stuff that's happening out there.
I love that. As in many areas of life, consistency is key.
Yep.
Well, thanks, Mike. This is a lot of good info. So these are the top concerns that come up.
This is what's happening right now that we're seeing from the pad splits too. We always see the credit and the overvaluation and stuff. It's all about being true to your numbers and yourself. If you're going to make this thing, just treat it as a non-emotional, easier said than done, venture into business to create that income and wealth.
Fantastic. Well, thanks for the time today.
You're welcome. Thank you, Michael.
Yep.